Good day, class. Welcome to Unit Standard 117156. In this Unit Standard, we will look at how to interpret basic financial statements. It is made up of 4 sessions. In this session, we will start by looking at how to analyze the basic elements of an income and expenditure statement. In order to survive in the cutthroat world of business, managers increasingly need financial management skills, which include all the financial activities of the business, such as financial planning, the implementation of organizational and financial controls, and the drawing up of financial statements. It is important to understand how to make a profit, what to charge for a product or service, and how to contain or cut costs. Compiling a set of monthly management accounts will assist in the day-to-day decisions and activities of your business unit, cost center, or small business so that you can manage it proactively rather than reactively. A business is required to submit financial statements on a yearly or half-yearly basis to SARS in order to determine its level of taxation. These financial statements include a cash flow statement, an income statement, and a balance sheet. Generally accepted accounting principles are used to prepare financial statements. According to GAAP, assets are valued at their purchase price, which may be significantly different than their current market value. Revenues are recorded when goods or services are delivered, and expenses are recorded when incurred. This flow does not happen at the same time as the actual receipt and payment of cash, which is why cash flow becomes so important in a business. Income statements are financial statements that measures a company's financial performance over a specific accounting period. Financial performance is assessed by giving a summary of how the business incurs its revenues and expenses through both operating and non-operating activities. It also shows the net profit or loss incurred over a specific accounting period, normally over a fiscal quarter or year. A cash flow statement is a financial statement that shows how changes in balance sheet accounts and income affect cash and cash equivalents, and breaks the analysis down to operating, investing, and financing activities. The statement captures both the current operating results and the accompanying challenges in the balance sheet. A balance sheet is a financial statement that summarizes a company's assets, liabilities, and shareholders' equity at a specific point in time. These 3 balance sheet segments give investors an idea as to what the company owes, as well as the amount invested by the shareholders. An income statement shows you both the income and expenses of a company. It allows you to judge whether the company is spending too much on particular expenses, and to see whether they are turning a profit for whatever the time period of an income statement was. An expenditure statement is a document showing the amount of profit earned minus the amount of operating expenses. The difference is reported as a profit or loss. A manager or business owner needs to be able to compile a cash flow project for the business, because this will equip them to deal with cash shortfalls as well as they arise. A manager can estimate how many sales the business is expected to make, what other sources of income there may be, as well as which proportion of the sales will be cash sales and which would be credit sales. They will also know which payments need to be made and when they are due. This puts them in a position to be able to predict the flow of cash for the coming months and proactively determine potential areas of shortfall, which enables them to make the necessary arrangements, for instance, getting a loan from the bank or encouraging debtors to pay on time. All companies provide cash flow statements as part of their financial statements, but cash flow can also be calculated as net income plus depreciation and other non-cash items. Cash flow ratio is comparing the amount of cash generated to outstanding debt, which shows the company's ability to service its loans and interest payments. We have come to an end of our first session. Please ensure to go over your learner guide as we will continue with the next session after the break.